what's happening. And then you can have a few of these set up, right? This can be a buy stoppable opportunity. This one can be a buy stoppable opportunity. This one right here, which again, if you notice, is not one that can be seen, but could be a valid and good trade, right? So in the scenario that a trade like this doesn't get presented, or you don't end up in a trade like this, a trade like this, or a little bit of sideways on an E micro right here, could be completely valid for an entry, right? To give you a little bit of an example of that, if I can, let me go inside of this action again, right here on the left. There's not really a good example here specifically. Yeah, there's not really a great example in this one specifically. Maybe there is one on like NVIDIA, because we've looked at that one a few times. Let's go ahead and take a look at that. Let's go back to this specific area here where we've looked at this a few times now. This is the trade that I personally traded, so why not take a look? Right, so again, I traded some, oh yeah, so this is a great example, because if you notice this line right here, this is one of those examples where the area within which this setup was happening on an E micro, right? So again, this would be a buy stoppable high on an E micro, and I'll show you that in a second. But where that's happening on the E would not be really a buyable area, right? So like you have the MB1, maybe MB2, and you can buy stop this high, that would make sense. Or like MB1, MB2, and maybe you buy stop this high here, or MB1, MB2, and you buy stop this high, or MB3 as part of an MB1, MB2, or MB1, 2, 3, where you buy stop this high. This could all be potentially valid. Those are completely fine if you're just using an E time frame. And like I said before, if you're just using an E time frame, those are the opportunities. It's just that you might be limiting yourself on certain assets that you're watching, especially if you really want to get in behind them. You're limiting yourself to the actual opportunity being presentable, but also you're simplifying your system. So those are kind of the weighted positives and negatives of which ones you choose to do. Now, in this case here, if you notice this red line, right, what you'll notice is, again, same thing. This setup in this case is happening kind of in or around that floating supply, or like this area here, if you notice, right? It's just in or around that floating supply. So basically at the part where we've moved from a stage 1 to a potential stage 2 delivery, and we're kind of entering, or can enter it into that area because it's still around that existing floating supply. So if you don't know what I'm talking about, make sure you check out the last video, because we spoke about floating supply and how it's truly generated. So these little entries here can still act as decent enough entries to get behind it, because it's still in a good spot to trade. So that's what this is doing, right? So you can notice it's a little bit higher than this high right here, but it's still following the overall principle of what we wanted to see. If I move to a 2-minute and simply zoom out, you're gonna see the same thing I spoke about a second ago. Every move that basically I trade comes down to the following. There's some containment of supply within a market that I'm already establishing bullishness on. Price moves beyond, to or beyond the point of supply, and from that point creates buyable highs in the form of MBs on the E time frame, which are then transposed to major MBs, right? Because they're kind of larger, or just highs that are buy stoppable on an E micro. That's all that's happening in the market over and over and over again. What's really cool is if throughout this portal material, you have gone and tested trades and looked at trades and found examples, you can go back to them right now and do exactly what I showed you. Go to a 30x multiple lower. If you don't have access to it, then don't. It's whatever. It doesn't matter. But if you do, then I definitely urge you to, and look at what occurred. And zoom out. The move will always be the same. This right here, if there's anything for you to remember, is the essence of the entire market. This in this box is the essence of everything. You have a move, or some kind of move occurs. You have the containment of the supply in case of a bullish market. We move past the line of containment to or beyond it. Right at the same time, the 60-minute, or sorry, the E time frame is creating accumulation MBs, and then the E micro presents to you buyable highs throughout the market over and over and over again, and all of those can act as potential entries for your given system. So what you'll notice, if I just simply draw a line through this, right, that is where we know like all that supply and all that stuff exists. But we already know the way that we think, which is that supply is getting involved throughout all of this. Supply is getting involved probably the same amount above it. And it's all part of the fact that we're moving from a stage 1 into a stage 2. So we have the true like space to move into a stage 2. We kind of can allow the thing to move into a deeper stage 2, which means that theoretically entries can occur almost at any point inside of here. And you probably want to stop trading it the higher up it gets, especially as it starts clearing out the actual high of the initial supply containment, because at that point you're getting into stage 2 territory that should now deliver, and you make money on the money that you've positioned yourself in, or fails for a new setup. And you can get behind that setup because now you're in potential reaccumulation. So ultimately what's happening is, if I do it like this, right, you're allowing yourself to trade from basically the point of containment up until here if you're allowing yourself to look at the E micro, because you have a variety of opportunities since now your lens or your perspective has been opened up to all this possible action of trading. And it's what I call, this is the containment explosion, which happens through the containment line. That's that move into that stage 2 where you can have an entry that already starts at that line, right? Because again, notice this containment line here would be right at or above the line of containment. So it would be valid to take a buy stop right here, right? It would be valid to put a buy stop right over or just at this high. Maybe your stop loss goes like somewhere here. And then of course, as a move starts, you can already see how a basic stage 2 delivery, here it goes, how a basic stage 2 delivery can be a return of whatever this is, right? If you look at that, that could be a 1 to 10, 1 to 20, 1 to 6, whatever, 1 to 5, 1 to 50. You get insane kind of rewards on the risk that you take, right? If this is your -1 assessment of risk, if it loses, it is what it is. If it moves and then it comes back, it's a break even. If it moves and comes back and then sets up another high to buy, you can buy through that high and then the same things play out. Or instead of being a -1R, which is your assessment of risk and you're completely fine with it because you've already gone through the process, right? Or it's not a break even, then it becomes a winner. And the winners become potentially big managed winners. So on the E micro, when we step down into it, this is what's actually happening, right? This is what we're always going to see on the E micro. So the E micro always comes down to seeing the same thing. This is what an E micro will always look like. Every single trade that you take or look at can be boiled down, can be fractalized, can be taken to its lowest possible E micro. So that means the E divided by 30, and we'll show you this right here. Always. Any trade I find, any trade I take. So again, I can do this as a quick example, but if I move to, and again, as I was showing here, right, this is that example where on the E, you don't see this trade. This is not a trade you see on the E, but if you notice on this time frame, I'm going to move this red line out for a second. Here's a gray line. That gray line is coming directly from the Mentafex structure premium set to the period range. And you can set this to supply demand range. It's going to do the same thing, right? For the most part, there will be a high here as well. There it is. It's the same thing. They just measured a little bit differently. And we'll likely have material within the portal on what every single setting here does and how to actually use it and set alerts to it. But overall, here's a gray high. So again, a gray high, especially within the allowable area where you're willing to trade, becomes a potentially buyable point. Now, for me, the other indicators on my chart, so in this case, the 50 SMA, the 20 EMA, the 10 EMA, all look clean enough for me to take this trade, and I like what this trade would look like, so I'd be willing to take this as a long. And again, if you buy stop this high, your stop go under this point or this point here, wherever you see fit, right? And then the delivery is the delivery. So if I kind of go to those 65-minute now and show you this right here, right? So you can have that trade. You could have had this trade in here. And these are all those trades that you could have taken. I took this trade personally at the time, right here through this high. This is where I entered, right? But all those become allowable positions. And if you notice, that position right there specifically is not a position that is made very much available to you on an E timeframe. So on the E timeframe, this is not a position that I could take. Now, I really want it to be understood that that is not a necessity. Trading these kind of entries does not have to be a necessity. I think it's very beneficial, and I think if you teach yourself to understand what this looks like, well, not even teach yourself, but if you listen to what is being taught to you and you see it over and over again, you will notice how many opportunities truly become available. And this can be used against lower timeframes and higher timeframes, which is why within the application of materials videos, you have a direct example usage of it even on a lower time frame. So make sure you're watching these because they're all available for you guys. And show up to the webinars, guys. Every single Sunday, one of the best things you can do, okay? So this trade does not ever become available on an E time frame, but the E micro, because now you understand what an overall basically model delivery looks like. Supply comes in, you have a supply containment. The supply basically is unable to maintain supply while accumulation has played out. So demand takes over. You have the move through the demand line or the containment line. That already sets the precedent for potential entries or entries higher. Entries are going to be available basically within the area from the containment line up to basically the high or a little bit higher, which is exactly what happened here. And this becomes a viable trade. I personally did not take this trade, but it does become a viable trade. Now, I don't know if this comes back down. So in this case, this would have come back down and not given you the opportunity. And this leads me to the next important point, which is that if you end up, I'm getting a call. I have to hang this up. This leads me to the next important point, which is that if you end up trading higher up in the E micro range, you have a higher likelihood of being stopped out by the next stage one, by the next containment of supply, right? So again, this would be, I'm just going to show you this on the daily because I want you to learn to use the containment of supply on a V. So there's the V. If I draw it in, there it is. So the next MMB that forms within this move, because I enter, or in this case would have entered on a higher basis of where the E micro is happening, or of where we are in this overall play-by-play, because of where we are here, which is entering like here, we up the likelihood of the next stage one stopping us out. So it's very important because that's going to play a part in your management, right? But in my specific case, my entry ended up being around here. So I never got stopped out of this move right here. I never got stopped out of this move. I survived the stage one, and then the move happened from there, right? And it just went insane. And it had like a fucking wild move. And then this thing, just to really make this clear, right? To remember how trends function. This thing had one of the wildest moves of all time. And once again, all I needed to do was catch one of these moves an entire year to do over 50% of my account, 100% of my account, and literally nothing more, right? If you start to think more so along the lines of, I want to get the good trades and I'm willing to take all the sour shit in between, the break-evens, the losses, and the patience of doing nothing, you are going to make an unbelievable amount of money. Not my advice for me promising, but you're going to make an unbelievable amount of money because you understand what you're waiting for. And when it happens, you're able to take advantage of it, okay? So what we have here is a demonstration of what the E transposed to its E micro can look like and where the opportunities are. And very simply, right, once you're in that trade through any of these potential entries, so you basically learned a better formula for entries as well now, because all of these can act as potential entries, you can simply manage the profit or hold for a bigger move. And like I wrote right here, this is that rule that I just told you, the lower that you get into the move, so from the containment line to the floating supply line high, the lower you get inside, which is not always possible, but you just have to do it based on what price is giving you, the lower you get inside, the higher likelihood you'll stay in the move, right? If you get in here, there's a likelihood that the next stage one takes you out and then starts a move. But guess what? If that happens, you can have the management to get out of some of the positions in this and get into new positions through the trades here. And all this will come full circle and make the most fucking amount of sense in a second, because we're going to literally look at a direct example of this and give you a true template that you will have access to and have for yourself. But the final thing before we stop this video is this little gray line. So these gray lines I've drawn all the way through, right? So that's this gray line that can act as that buy stop. That's this gray line that we can draw out and it can act as a buy stop. That's these gray lines within that gray line that can maybe act as buy stops. That's this line that can act as a buy stop. That is this line that can act as a buy stop, or the lines inside of it, because when price starts to come down and start making a line and start coming up, it can start making new highs that can be buyable because of the MB rules we've already discussed. So any of these buys can now become viable buys. Here's another viable buy. And in this case, maybe this would be a little bit too high. You can see this would have been happening up here, which I would say is a little bit too high. So I would have probably not traded this one, but I'd be willing to take trades and enter something all the way through this. And this is actually what I did for my GRRR trade. I'll show you that right now. That's exactly what happened here. Right, so let me start from the daily, which is my validation, because I want you to keep thinking in EVC. Well, C is, it's already in that bullish movement. The V moves into a stage one, accumulation MB, price pauses on the rising averages right here through the MMB1, builds that containment of supply. If I move to the 65-minute, which would be my E, right, we have the supply containment and it builds the MB, so this could be a viable long. Honestly, this is the long I should have been in, but I didn't take it. I'll show you the 2-minute now. If we go inside of it, you're going to get the full representation of what moves always tend to do, because moves just simply repeat themselves. And this is the entirety of what the market does on repeat for trends. And if we follow it, we simply get behind trends always, right? So this is that high that could have been buy stopped. So you can have this one inside of it as well, which is at the line of containment. But this is the one I'm specifically speaking about right now. Could have been buy stopped. Perfectly valid. I think Actually, I might have buy stopped this. I don't remember 100%. Let me try to bring up some stuff. Okay, yeah, so I was correct. Okay, so if you notice, I actually did buy stop this. Excuse all the markings, but I did buy stop this high through this E micro. I just simply moved my risk from this point to break even after this move became, after it started to validate demand. I thought it wouldn't come back. Then it came back and broke me even. But after breaking me even, which might have been my entire trade opportunity on this thing if I didn't use an E micro, it came up and then built another high. Let me now get rid of everything again so it's not all in the way. There we go. Right? Then it built another high. It built this high. So again, I drew out that high and I buy stopped this. I then got into this trade and I took a loss. This trade actually stopped me out for a loss. Price then started building out a new high. I was willing to buy this high, but as price played out, came down, came up, it built this high. You can already be a buyer at this high right here because again, remember, we are basically just at the high or a little bit above and above the point of containment, the line of containment. So we have a valid area within which we can look for and stock for entries because all we are doing is hopping onto the coattails of the overall composite operator who's already proven that there's accumulation behind this move and we're simply getting in on the accumulation with them. So again, this can act as an entry that could be valid. I just did not take it. But then as price moved up, because it wasn't clear to me just yet, I wanted this 50 to start turning up a little bit. But then as price came higher and paused here and made this high right here, I could have buy stopped this high right here. Now, in my specific case, I had the choice to either buy stop this high or this high. I simply just set it to this high, and that was my buy stop. So again, this is an E micro buy stop that I'm getting into that is now above what would have been the natural double MB, which still could have been the original trade and would have made me money. I just chose to follow this thing through and ended up getting into a trade a little bit higher up and managed from there on out. Managed this trade, made my money, got out, all is good, and then I traded again over here somewhere. But I got stopped out of this at break even. And again, this is the same thing. If I zoom out, you're going to see the same thing. The line of containment or the supply line gets created. Price then creates a trade at or above through the high of the line of containment. At the time of me getting into the trade, which was right there, notice where price is in reaction to the line of containment. The line of containment is already way down here, right? But I would have been willing to even buy stop here. Like this right here could have been a valid buy stop right there. All right, same thing. It could have gotten me into the trade, played around, and I would have also made money on this. So what's really cool, and what I really want you to understand is that in a good market, you will theoretically have a number of good opportunities, or in a good trend, you'll have a number of good opportunities made available to you from the line of containment to kind of the little area above a high where the floating supply exists. But again, it's coming down to the same exact thing. Okay. And what I wrote here is that this is kind of your overall understanding to a schematic buy stop. So basically, this is where you can you have the freedom to choose if you want to buy something or not and get into it. And this is one way that you can really build a foundation for understanding trades or entries, right? So this buy stop is at accumulation MBs, momentum MB continuation, which is rooted within the full cycle. And as I said before, this is the buy stop the high principle, right? Which is, and this is what the principle is, and I already told you, but this is very specific, a trending or winning market will make you money if you simply buy the high. And this applies to everything in the world, including your own equity curves. So the way I've done this before for people, just to kind of explain this, is if I even show you my own data collection and my own trading performance since this is now about 12 months, 13 months at the time of recording this. So this is from February of 2024, and this is up to February of 2025. So this is about exactly a year now, right? If I simply asked you to buy the high through any of these points, so all I mean by that is if I take this and I throw it in here, right, as an example, and I throw this over here and I zoom in, right? If my trading was simply to do what I just showed you and said, this is an E-micro, where should I buy? Well, if I buy stop a high, I should make money over time, right? Buy stopping a high, stop maybe under here, I'll make money. If I buy stop a high, I'll make money. If I buy stop a high, I'll make money over time. If I buy stop a high, I'll make money over time. If I buy stop the high, right? So what happens is in truly trending or profitable markets, buy stopping the highs of a profitable market will over time, no matter what, make you money. So with this understanding, right? So now theoretically, if someone was trading my equity curve, you would wait for me to get into a trade and literally buy my equity curve here and likely start making money on your equity curve over enough time. Same thing over and over and over again. Because this is it's not like the special sauce. This is more so the way of the world. This is the way of psychology. This is the way that psychology influences the way that trillions of dollars moves into the markets every single day. And that is ultimately that a true trend or a good existing market on any time frame, no matter what, whether you're looking at a 1 second, 10 second, 1 day, weekly, monthly, 6 month, 12 year, I don't fucking care. 20 year, if you're Warren Buffett, you're looking at 40 years. It does not matter. By stopping the high of a good move, this is the buy stop the high principle, will lead to overall profitability. That is my personal opinion, of course, guys. Okay, so please make sure that you test these things, which is why you have a unmarked process by which you need to go through step by step. So go through it. And that becomes true and very true for the E-micro. The E-micro will build the buy stoppable highs of a bullish market, and those buy stoppable highs with proper risk practices, with proper risk management, and the confidence that comes behind it because you've gone through the process will lead to overall profitability in your equity curves. So that's the buy stop the high principle on an E-micro, right? And it'll apply to anything that's profitable over time. And just to prove this, right, I'll use a personal anecdote that happened to me. Because I interact with and talk to wealth managers that help me manage some of my wealth to put it into real estate, to treasuries, into even potentially like markets. But I don't really invest in markets because I invest my own capital in markets based on what I see fit. But one of the guys that I was working with was, I think, talking about this thing, the IWD at some point. I think he was talking to me about it back in 2024. Yeah, sometime around here. And all he said to me was, when the market was here, he said, "Oh, we really like that prices, have been playing around at this area." Again, they don't use charts, but they said that prices have been around the 170 for a while, and we think that if it makes a move to 179 or 180, we should see a nice bullish market. And they were telling me to put my money into this market. But if you notice, it comes down to literally, and again, these are investment professionals that have literally done 30 years, 40 years plus of schooling, that work with people that manage hundreds of millions, if not billions of dollars for their clients. And you have multiple thousands of companies doing this thing. So there's trillions of dollars moving through. And they simply look at something as simple as price has not proven its willingness to go lower. We've continued to accumulate this thing while it's not proven to go lower. We think that if it makes its way through this high, it should continue delivering. And that's the same idea. And again, the way that they manage their portfolio's money is they say, okay, we're going to buy, and we're going to hold on to this because it's clearly in a good buy and hold state. And they'll buy it, and their actual thesis, even though they might not even understand that this is their thesis, is based on the fact that they're buying the high. It's the principle of buying the high. A market that they have assumed is going to do well, a market they have found is trending, and we have our ways of doing that, the EBC, working ourselves through the models, through where we are in the action, and basically choosing the best kind. They have found themselves making money over 40, 60, 80 years for their retired clients that are putting in hundreds of millions of dollars through the simple principle of buy stopping a high. So I want you to realize as you're moving through this portal, on one hand, yes, I'm teaching you from my point of view, from what I've done for myself, what I've seen work for others, what I've seen work for me, but at the same time is based very, very deeply in multi-functioning, trillion-dollar based operations for hundreds of years. Okay, so buy stop the fucking high. Learn to trade with the trend. And this goes directly against what everything online says, right? Remember, everything online that's teaching you to do anything is constantly teaching you to basically get in on the opposite side of the market. So it already goes against what most people say. It's very hard to say, hey, we're turning up, start buying highs, right? Most people will even at these points say, we need to at least come down a little bit so we can be buyers here. And that never happens. And instead, right, you get your deliveries, or they're just sellers overall, right? But again, buy stop the high, buy stop the high, buy stop the high principle. Don't just start doing this randomly, go and test it, but buy stop the high principle. And now we can take all this and throw it into, an absolutely beautiful, beautiful thing that I've spent a lot of time putting together. So it's available to all of you, and this will be available to you too, but in the next video, we will cover it. But this is the overall movement of the market, explained and transposed against the E-micro and the E. So you understand where this idea of buy stopping the high principle comes from. And at the same time, this now opens up your own reach for new and usable opportunities in the markets you watch on the timeframes you watch. Because remember, when we set out on this portal adventure together, when we set out to kind of give you all the information that we possibly can give you, I told you that by the end of it, what you will have is a functioning system that you understand, that you know why it works and why it's so powerful. You'll know why a lot of the shit that you might have done before is completely useless and worthless and is not needed. You'll know the exact process you need to take to get to the point that you want to get. And what was the stuff that I said? Oh yeah, and you'll be able to trade on any market you personally wish against any time frame because you have the actual components that make up how orders come into the market, and you have ways to prove it against your EVC. So everything so far has been a build up towards that, and funny enough, that build up has resulted in us basically moving back to the initial thing I taught you: move higher, the pause, demand validation, and you're starting to realize our entries just exist inside of this area here as we move higher. And we're just simply finding these pockets of opportunity, and we're taking advantage of them from the containment line now to the line of the floating supply or a little bit higher. So you can just kind of float supply higher and boom, right? And the entries we take end up being opportunity, 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 because it's a repeating cycle of the exact same thing. And once you understand that, I mean, you guys are going to unlock the fucking world for yourself. All right. Next video.